Good morning, everyone. Welcome to our Friday morning trading room. Just a moment here. I'll get the screen share going on. So yesterday, in spite of being a rather sideways kind of day, for the morning session anyway, the market got a little bit of giddy up in the afternoon, especially going into the close. Fairly quiet through the overnight. The market topping out 67.45, retreating back to near yesterday's close or slightly below. And now we're kind of in this sideways drift again. I'm looking at this wondering whether, because of this uptrend from yesterday, whether this current move is really more like a bit of a bull flag, and if we're going to see another rally from here. Trade forecasters suggesting we are in full-on trend mode, or trend mode, scalp mode, wishful thinking, trend mode in about 3/4 of an hour. So if that holds, if we remain in scalp mode, we can probably anticipate minimal follow through on most of the signals. Might be advisable to grab any open profit when you have it. We're getting some early signals here. The eagle producing a rule of 3 signal. That's the counter trend signal in the eagle. And that occurs when the market starts printing signals against the band. So we have a bearish band here. And we've started to produce buy signals. Now, typically we will get 3 buy signals. But what's very important is that we get a test of the extreme, in this case, the extreme being the low, and a rejection. So the signal is complete even though we only have two buy signals. Expect a third, expect another little hiccup here, I would say. The hawk, a little bit of a jumbled mess. The falcon giving us an early buy signal here, a trend change signal. Let's see what's going on here on the raptor. I mentioned this the other day, but it bears repeating. If you see a lot of signals printing in a short time frame, that's telling you the market's in a little bit of a sideways drift. So here too, it looks like we're establishing a little bit of a trading range. And we're near the top end, so we see whether we can get a breakout from here or whether they will, in fact, if the sellers will knock the market back down. Right now, things looking a little bit bullish. Here, the hawk now producing that first micro-macro cross. Here on the raptor, I would like to see a little bit of a pullback. That would give us an early cloud crossover signal. That's the #1 signal that occurs when the clouds cross. So the clouds cross, there's a little bit of a pullback. So those are the 2 components to the #1 signal. And then the market will start off in the new direction that the clouds have printed. And that will produce a #1 signal. Here, what we're looking at would be what I refer to as an early #1 signal. It's early because the clouds are not fully crossed, but they're trying to cross we've got the push through the clouds. Here's the pullback. So here they come now with a buy. Now I might actually try this. The market's been a little active early. So we'll see here whether we get a buy signal. You can always use a second push entry as well. So I've got 2 warning dots. There's the buy signal. So I'll just buy in. And I'm going to try it just with a single contract. That's why I went to manual mode. And I chose to do it this way rather than use the set prices button, because I was expecting a little bit of a breakout here. When we're near the top end of a trading range, remember where all the exit orders for all these sellers are? Yes, they are right above here. Right, so that's where all their exit orders are. If you were a seller in this market, your exit orders would be right here. You can see the sellers now trying to push it down a little bit. Oh, if we get through here, we could get a little giddy up. Come on, let's go. All right, we're close enough to the break even. I'm just going to force the trade to break even now. Oh, hit the break even trigger anyhow. You could try to run this one out. I wonder if it's going to go much higher. Maybe where's the next resistance line? Well, the next target, once we're above the median line, would be here, 67.34 3/4, or in that neighborhood anyway. Hooray for me. Hit the profit target, and we'll see whether we get any follow through from here now. Yes, Scott's asking, you forced it to break even by clicking the break even button? Yes, sir. That's what that is for. Once you have an active trade, you can actually force your trade to break even. And you can see I have it set at break even plus 1 tick. Now you can protect more if you like. You know, I could have, providing I had 5 ticks profit, I could have had break even plus 5 ticks. If I wanted to keep it back a little bit, I could have gone even break even minus 3 ticks or 4 ticks or whatever. Or you can also set it at 0. You can be right on the order line. But typically, you know, to at least cover a little bit of your commissions and fees, I could have also rolled down my break-even trigger also, but yeah, this is easier just to hit the break-even button. Hey, way to go, Mark. Mark says picked up a couple of bucks here on that trend change signal. He says he took the third one. 1, 2, 3, that one right there. Yeah, you got you do pretty well out of the open, Mark. I don't quite have that nerve. Here's a little interesting note for you Falcon traders. I would have considered this signal right here a late filter entry signal. Even though the trend line went out of sync here, just a refresher, the late filter entry occurs when the filter goes out of sync, comes back into sync, but the trend line itself never changes color. This trend line changed color, but only for a bar, and probably what happened is this bar went one tick too low. If it goes out of sync for just a bar, very often I will ignore it. But if it's out of sync for like 3 bars, as it is here, well, then it's out of sync. One other thing to note, that with the late filter entry signal, even though it is a very, very strong signal, it does get weaker as you produce more signals, just like with the other tools, just like I showed you on the Raptor a moment ago. One signal is good. 3, 4, 5 signals, no. Things just are out of control. So same thing here with the late filter entry. The first one, great. Second one, all right. Third one, honestly, I would probably pass. Even though I think it got down here to its high probability target, when you're just producing late filter entry, late filter entry, late filter entry, something's not quite right. The late filter entry signal is also showing you a shift in the momentum, right? So you don't want to see too many momentum shifts. One momentum shift, okay. That kind of tells you there's going to be either a bullish blowback or the bears are going to take the market away. Oh, it looks like we might get up to that next resistance line after all. Maybe I should have hung in a little bit longer. Oh well, no point in being greedy. We'll take the high probability target when we got it. Got slipped a couple ticks on that one. That's a little annoying. I didn't realize that at the time. Sorry about that, guys. Here on the Raptor, I was pointing out the cloud crossover signal. That's the #1 signal that was forming. So the cloud's now fully crossed, a teeny tiny pullback, and that was enough to satisfy the programming requirements. However, when the programming is that slight, I would rather wait for a slightly deeper pullback, maybe hold out for a #3 signal instead. Joel, yes, I got your email and I replied, or I am in the middle of replying. Joel is trading stocks, and those of you trading stock market and the Forex market will have noticed that your trade manager may give you some rather large position sizes. Now, Joel, I'm CCing Ben on the email because he will confirm that this is the right setting, but I believe the quantity rounding and quantity divisor values are where the problem is at. I think what you're going to need to do is you're going to need to set a divisor value here. Normally, like for instance, in the Forex market, when you're trading lots, you're actually trading 100,000 contracts, if you will. They're not contracts in Forex, but it escapes me at the moment. So you're going to have to do a similar thing here with your quantity round down value and your quantity divisor value. I forget which one though, which is why I've included Ben on the email. Futures, of course, because the contracts are all preset sizes by the exchanges, you can't trade just one share, if you will, of the NASDAQ. You have to trade whatever the exchange has specified, and the same for other contracts, of course. One other thing you can do for those of you trading stock market and Forex is you can go into manual mode, right? You can go from risk mode to manual mode, and you can specify your quantity here. So let's say you're routinely trading 100 shares. You can set that value. And when you're in manual mode, if you hit the buy button, you will buy 100 shares. Not whatever the value came up at. I think Joel was buying like 288,000 or something like that. But yeah, there is a solution. I just, off the top of my head, I don't remember, and I wanted to double check it with Ben. Okay, Joel says I did experiment with those fields, but it seemed to have no effect. Joel also asked, how does that affect the risk management if you are in manual? Well, okay, here's the thing with manual mode. When you are trading in manual mode, you have disabled the risk percent module, which, unless you're doing something really silly, is not the end of the world. So for instance, if I know most positions when I go in risk percent mode and I run, visually an average size stop for me, I know I'm going to be risking about $300, give or take. So even if I'm in manual mode and I take a position and I set it down here and it's like $360, $350, I know I'm still in the neighborhood. Okay, it might not be 2%, it might be 2.25%, but it's not, these are not the kind of stops that are going to ruin you. Right? If you're out 0.5% here and there, that's not the kind of stuff that's going to kill your account. The kind of stuff that's going to damage you as a trader is if you're down here and all of a sudden you've got nearly $700 at risk when I normally, given my account size, only risk 300. And it's easy to calculate your risk, right? Because if you're trading, say, a $30,000 account, 2% of that would be $600. So you never want to have more than $600 at risk. If you want to only risk 1%, well then of course you never want to have more than $300 at risk. So you'll know intuitively, even though you are in manual mode. And if I set up a trade this way and I see, oh, that's $700, that's too much. And even if I've already submitted the order, I can still hit the close button and cancel everything out. All right, something's... Well, Joel says that kind of defeats the purpose of Trade Manager, doesn't it? Well, yes and no. I'm just trying to give you a little bit of a workaround until we get the right values for you to use your risk percent module. But there's, as you know, with all things trading related, there's plenty of ways to skin the cat. There is a solution to your problem, Joel. I just don't know it off the top of my head. And Ben's more familiar with that part of the programming than I am, so I'm sure he will be able to give you a solution to the problem. All right, so after a quick little run up to the, was that the overnight highs we were at? No, not quite, to yesterday's highs. So yesterday, the market topping out. Today came back to yesterday's closing high, I guess. And we're seeing a little bit more selling come into the market now. The Hawk already bearish. The Falcon trying to change direction. We're back into the hard edge of the trading band, so we're going to anticipate something's going to go on here. We are still in scalp mode, so things going to be a little bit choppy still, I think. All right, crude oil in a little bit of a sideways drift today, as is the euro dollar, the other two markets I've got my eye on right now. Yeah, that's good. Joel says, I'm very patient. You have to be a swing trader. Well, I appreciate your patience, and we will resolve your problem for you. I'm certain of it. Okay, so the buyers are going to maybe try to make a comeback here off of the hard edge. We could produce a number 3 signal. I think somebody, Scott or Steve or somebody yesterday asked about if this is your order, is it better to enter on the hash mark or above the high? Well, here's an instance where we're kind of in the middle. I have to give up about 4 or 5 ticks actually to get my entry. So it's a little bit of a toss-up. Because my profit objective is 20 ticks, so I'm giving up about a quarter of my intended profit target just before I get entry. Maybe what's the more important factor here is where can I afford to place my stop? The ideal stop is actually down here, and I probably can't afford that. So I would either pass on the trade or wait for a second push opportunity, which came at the high. We're probably going to produce a number 2 signal here. That's the counter trend signal. Oh, right, you are, Floyd, and thank you so much for the reminder. Monday is a holiday. No trading on Monday. So Floyd says there may only be 1 or 2 moves today. Yeah, thanks for that reminder, Floyd. All right, so there's the hard edge buy. Oh, didn't even give me a chance to set it up, scoundrels. This would have been worth a try, and here's my reasoning behind it. Okay, I know the hash mark is hard to see because we got that, oops, sorry. There we go. We've actually got 2 signals overlapping on each other right here. We've got a buy signal and a sell signal, one piggybacking right on top of the other one. So what makes this signal a little bit more doable? Well, it's just the plain logistics of it. I have a reasonable amount of room here before we re-encounter the highs that I might be able to do something with my trade if it doesn't get all the way to my profit objective. So you see how they're staggering a little bit here? Well, if I'm really nervous about the trade, I can hit my break-even button now. And if they go, they go. If they don't, they don't. They should. But if they don't, whatever. I'll get tagged at break-even. No harm, no foul, as they say. Or I could bring my stops in a little bit, maybe a couple of bars back if I wanted to give it a little bit more room to work out, and I don't mind taking like a $50, $60 tag on the trade. But yeah, they developed that trade just a little bit too quick for me to be able to get in on it. If there's another rejection here at the highs after the buyers try to buy the market up like this, there is a pretty good chance it will try to run down, maybe even retest the low of the morning. So I guess the lesson there is if it looks like you have room to do the trade, then go ahead, do the trade. If it doesn't look like you have much room, see like this number 3 signal, we're starting to get a little bit close there. Or like the number 1 signal that I showed you earlier. This is the 3rd run up by the buyers. So like I said, if they can't get it together here, it's probably going to reverse and head lower. Oh, there, a little bit of follow through there still. Phyllis asks, just curious, do you ever use candlesticks in your trades? If you're talking about, do I put candlesticks on like the Raptor? You can. If you're going to go to a regular candlestick bar, though, you're probably going to be trading either a time-based chart or a tick-based chart. The Raptor and the DTS tools will still produce signals on other formats. Hold on a second here. But the bars are obviously going to be much larger. I think my screen sharing software is giving me some fits here today because I'm getting a lot of drag on my charts. All right, so here is now a 3-minute chart, and you can see the candlesticks compared to the mean Rinkos. The Falcon, by the way, will closely approximate what's going on with the Raptor. So there's the Raptor on a 3-minute. Here's the Falcon on the default 8 tick. It's still tradable, of course. You're still getting the signal prompts, as you can see. Decent follow through. The only real difference, I suppose, is stop placement. But for those of you, like I know some brokerages, interactive brokers, for instance, I don't know why they don't provide tick data, but they don't provide tick data. So you may end up looking at something like a 3-minute chart. But for the most part, Phyllis, I will look at candlesticks, but I'll usually run like a maybe a 5-minute or 15-minute chart. Alongside my DTS charts. Sorry, I'm not good at multitasking. My wife will tell you that. I can only do one thing at a time. So if you're, and there's nothing wrong with doing this, by the way. So here's the daily NASDAQ, but let's say you wanted to run, oh, I don't know, let's run a 5-minute chart next to it. If you wanted another point of view, there's nothing wrong with having a 5-minute chart alongside your Raptor. Just kind of gives you a different perspective. Just remember, the rule of thumb is that if it doesn't help you make a trading decision, you don't need it. And honestly, it's more important to be able to make a trading decision than even to make the right decision. I know that sounds kind of convoluted, but having the ability to make a decision on the trade is more important than being right. There, that's what I meant to say. And I know that doesn't sound right, but it is. Too many people get stuck in that rabbit hole of trying to eliminate all losing trades, and they forget that that's not the objective. The objective is to make money. Yeah, like Phyllis says, there's no point in overloading your charts with all kinds of indicators. Most indicators duplicate themselves anyhow. While we're waiting here, let me demonstrate. So let's pull up a few. What are some popular ones? Money flow is pretty popular. RSI, of course. Stochastics. What else can we throw in here? Woody CCI. There we go. That's enough. Okay, are these, oh, Woody's is really crazy. Are these really telling you anything different? Don't they all look more or less the same? Money flow is a little bit either ahead or behind, but money flow and CCI are pretty close. Let me put the real CCI on here. That's just a little bit nuts, that one. Okay, so we got stochastics and RSI almost painting the same picture. Money flow and CCI almost doing the same thing. So really, you know, your indicators, the math behind them is not that different, especially when you get into ones that are on a logarithmic scale. That means it's like a percentage scale. They're all going to more or less give you the same kind of information. Just so my point is, it's redundant to have money flow and RSI and stochastics. You're not really getting any different points of view. And I don't know, do you really want different points of view? Wouldn't that just make things more confusing? If you're going to pick an indicator or a tool, then pick it and learn it. And don't keep flip-flopping back and forth between a bunch of them. Because every time you do, you're starting the whole process over. You're starting to learn how to trade all over again from square one, because now you have to learn how the new indicator works. And if every couple of months or every month you're flipping over a new indicator and you're starting again from square one, how are you ever going to get to square two? Yeah, see, like Joel says, I'd like to use 50% and 3 plus and minus extensions. Great. That's fantastic. Will they work all the time? No, of course not. Do they help Joel make a trading decision? It sounds like it, so by all means, run with it. Yeah, Joel says it's uncanny how often they do. And well, it's because the market mentality. Markets are driven, well, nowadays they're driven more by computers, but computers are still programmed by people. So people tend toward averages, they tend toward whole numbers, they tend toward doubling and tripling and halves. So, here we've had the overnight move, probably part of the reason the market's a little bit stale right now is I bet we're somewhere around the halfway mark. Well, a little bit deeper. So there's going to be a lot of people looking at this and saying, that looks like a pretty good place to sell. Or they're looking at the morning run up and they're saying, oh, that looks like a pretty good place to buy on that little bit of a pullback. Charles Dow was the first to publicly identify some of those market tendencies. He split the market into thirds. Fib traders refined it a little bit more, but it's still essentially the same thing. Joel says the major markets hit the weekly 162 yesterday, so I expect consolidation. I think that's a pretty fair assessment, actually. As you know, I've kind of been looking for the market to hit the sideways skid since before Christmas. So right around here, I honestly thought we were at least going to enter into a trading range like this, if not a trading range like that. But the market, being the market, did this. So that's why I try not to be too predictive about what the market's going to do next. It has a way of fooling you. But let's put it this way, I agree with Joel, I would not be surprised to see consolidation. That would not surprise me. Yeah, Joel says, one thing I've learned is no one knows. And that is so true. If anybody ever tells you they know something for certain, especially when it's trading related, put your hand on your wallet, make sure it's still there. Because they're fibbing. Nobody knows. I don't care if you're Paul Tudor Jones or Warren Buffett. Nobody knows. Yeah, and Mark says, and run the other way. The problem, well, it's not the problem. The thing is with the market, it's a 50-50 proposition. So half the time you'll be right. So if you hit a winning streak, you can look really smart. All right, well, we did push on through after a little bit of a hiccup. We did get up here to the primary resistance line. Honestly, I would not have, where was my pullback? I probably would not have held out for that pullback. So I'm just as happy I took profit on target, even though I left an extra $100 behind. Oh well. we're sort of on hold now for the time being. Here was a nice eagle signal after the trend change, the clouds changing direction. And just as with the Raptor, there was a little bit of a pullback, encountered the hard edge, came out with a buy signal. So this would be the trend change signal on the eagle. Also tends to be fairly reliable. Also a signal that you need to take within the context of the chart, because if you're getting, where was it here, where we had a lot of band changes back and forth. Always try to bear in mind the bigger trend if you can. Well, are we going to get a bounce off the primary resistance zone now? I think it's do or die for the Bears. If they don't step up here soon, especially since we're sneaking up on the overnight highs. If they don't step up soon, they're going to miss their opportunity. So the Raptor and the Hawk likely to be the first two to produce a counter trend signal if we are going to get a shorting opportunity. All right, getting a little bit of an intermediate signal, halfways toward a 4-arrow consolidation here in the Hawk. What, did everybody go home already? Well, they might be holding the highs. This is the first, well, we haven't actually traded lower yet, but this might be the first sign of a little bit of a reverse since this little double top right here. Oh, I might have spoken too soon. Well, there they go. They're continuing to push a little higher. Didn't really get a strong signal from there. And that's true too, Joel, reminding me it's options expiration day. That always puts a little bit of a nix in the wrinkle, as they say. Well, we might be sitting here waiting for a few minutes. Our trend mode was pretty short-lived. Now we're in swing mode for another 15-20 minutes. After that, we're back into scalp mode, and that's kind of the way this day has been shaping up. Julian says no big sellers yet, only large buyers. Yeah, we haven't seen any aggressive selling yet, have we? They've just been trickling higher, closing in on that overnight high. We're only about 6 points off of that now. Well, got a little bit of a spark there. Yeah, we really didn't have much in the way of follow-up signals. The Falcon here gave us a decent trendline touch signal. The Hawk, or pardon me, the Eagle, still working on that very nice trend change / hard edge bounce. The Raptor also following through very nicely from that hard edge bounce. I was hoping the Hawk would give me a little 4-arrow consolidation here that I could have attempted, but didn't work that way. And now we're too close to the overnight highs to get too cute with the market. Joel says he made a few comments here about writing options, selling options, which is a very sound investment strategy, by the way. Writing options. He says 329,180 puts will expire worthless today. Just in case you were wondering about that. Well, I'm on hold here until I get something decent going on. I'm not quite sure what you're getting at. Julian asks, where is the most open interest? Okay, so it looks like we're getting a little bit of a reaction now to the overnight high, which was somewhere around 67.42. It's encouraging a few more sellers to come into the market. What I'm going to be on the lookout for is now a counter trend signal, a number 2 signal. Oh, in the option market, where's the most open interest? Normally, it's in the front month, but a lot of times options will be, a lot of option traders will be looking 3 months out. So anywhere from 90 days in tends to be the most liquid. You can check us, the CME website. You can also check Bar Chart is a pretty good website for that kind of thing. All right, so let's see now whether we get a test of the high, a test of the extreme, and a number 2 signal. Well, they still pushing. I wonder if that's going to be a double top or not. All right, well, let's put that back on the shelf for now. Oh, look at this. The Falcon actually giving a late filter entry. on that signal. So the Falcon, still thinking the market very strong. Joel says now an overshoot, and we'll fall back today, maybe. Well, that kind of bums me out. I thought, well, see, this is what happens. Here's my classic trading tool. 1 second while I pull it up for you. Here is a training aid or a trading aid. You run into problems when you're thinking too much when you're trading. Darn it. Oh well. It's not the first move I've missed, and I am certain it will not be the last. Well, I'm going to be on hold now for a while. That could have been the move of the day right there, folks. Well, they are on a big push now. Yeah, like Julian says, still no sellers. Somewhere through here, we will see a little bit of a reverse today, as there will be some profit taking, no doubt. But after this big run up here, I think we're going to be looking at more of a sideways drift to the day. I don't think the sellers have it in them to push the market all the way back to where we started. They had their opportunities. They had opportunity here. This was their last chance right here, and they blew it, which is evidenced by this rally up. They could not, they couldn't get it together. So all the traders that were selling here got stopped out, and that ended up pushing the market higher, about 5-6 points. So from here, it's likely that we will see a retrace somewhere to the hard edge of the trading band. But I suspect that probably for the rest of the session, we're probably going to be trading in a range similar to that. Sellers will be looking to short up here. Buyers will be looking to buy down here. Probably enough in there for a little bit of a swing or even a very short-term scalp. But I'm afraid that this, like I said, may have been the move of the day. I got a little bit of it. Didn't get shut out completely, but I could have, in hindsight, handled things a little bit better. All right, gang, I think we're going to button up shop here for the week. Reminder, no trading on Monday for the holiday, and I will see you again on Tuesday. Have a very nice weekend. Talk to you soon.